Good morning, everyone. Today is Wednesday, March the 8th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We've got a couple of things coming out today. We've got the ADP report that added a couple 100,000 jobs. The calculation of this number is still in the crosshairs of a lot of folks thinking that things shouldn't be looking this rosy, but neither here nor there. The big thing is that the Fed Chair, Jerome Powell, will be on the Hill for another day. And yesterday he said, hey, listen, we keep doing this and this is what's going to happen. And, the markets responded in kind. So let's take a look at what's actually happening. My thought, and if you've read my notes on the Benzinga Pro platform today, you'll see that I do believe the market action is a bit reflexive. Meaning, look at this. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months where we can draw a line straight through all but one of these candlesticks. This tells me we've got ourselves a sideways slosh. Now, I believe in the ingenuity of humans to create opportunity when things look really rough. So not looking at the end of the world type scenario here, but the fact of the matter is, if we respond as reflexive traders without paying attention to, wait a second, did I just hit the close of last month and have I recovered it? Yes, that means price action is going to hold there. Have I tested the open of last week? The answer is no, I haven't. So 39.75 still sits there. Folks, we've got ourselves a sideways patch. Look for the lows, look for the highs, and when they come off of that edge, you can look into the space. So what are we seeing this morning? What is actually happening this morning? So we've got a lot of news. It's going to move the market. Do not step in front of the trade until you see where things are headed. But we're sitting in a space where we're barely above the close of the prior day. And every time we bounced into 4,002, our chart collapses, but we are holding the low. So what does that mean? That means these are the levels we have to watch today. If the traders have come in pre-market and said, I'm buying these lows, they are thinking price action is going to hold. So at the very beginning of the day, when the bell rings at 9:30, it's going to be do or die for them. Either they break through the pass, pull back and hold it, or they don't break through it and we fade. And it's as simple as that. Wait for it, come to your edge, see where your risk is, buy at the floor, and get out if it's up here and it's not moving higher. If you think, hey, listen, this is a short, wait for the ceiling test. Wait for it to fade, take the trade. If you're wrong, you're going to get stopped out in just a couple of points. If you're right, you'll be able to ride it all the way back down to support. And that's really as simple as we can make it right now. We cannot overthink what is going on in the marketplace. Because, listen, nobody knows what's going on. And everybody that's trying to look ahead has been flat out wrong. All the bond guys have been wrong. Just everything. Everybody's been wrong trying to look out to the future. Now, when I say everybody, I do mean these big pundits that are positioning their gigantic portfolios saying, hey, the Fed is going to bend, the Fed is not going to let rates go. Listen, let's just take everything at face value and trade with what we've got. We sit in the current game. We need to use the current parameters and say, okay, I'm in good shape if this happens. Same thing going on here. Right? We want to watch the floor. If it holds the close of the prior day and then breaches resistance, I love the pullback test because nothing's running in a straight line these days. Watch it go up. If it pulls back and holds your floor, which would be the close of the prior day, we're in business for long action. If not, you can start with your short action up here. But if we don't lose the close of the prior day, it means buyers are trying to hold up the floor. That's it. Very quick report today. Well, I hope it's quick. I have no idea how long I've actually been recording. Same thing for the SPY and the Qs. Take a look. as long as we hold the close of the prior day on these pullbacks, things are going to be all right. If it loses the close, let it go down here and try to bounce. If it bounces and then recovers that close, you're in like Flint. It's going to run into resistance, folks, because nobody knows what's going to happen. And the only thing moving charts these days is flow, intraday flow. So easily you can go, hey, listen, if I get up over 400, I probably don't need to be short anymore because people are going to turn around and try to take me up to 401, 402, whatever. For us, we're still waiting on our rotational motion to get us out of our formations, but everything is looking just great, folks. Realize trend is going to be intraday. It's going to move backwards and forwards. And the way we're going to make trades is by going to support and watching it hold, or going to resistance and watching it hold. It's either one. Either it doesn't hold and I get to take the short, or it does hold and I get to take the long. Easy peasy. And I know it's not easy to trade because we're always second guessing ourselves. But realize you're your own worst enemy in these sorts of things. Just look at what's happening. Could you be wrong? Yes. What does that mean? It means you set your risk appropriately. Of course we're going to be wrong. It's the market. No matter how much studying you do, no matter how much analysis you do, you're going to be wrong once in a while. So make sure that when you're wrong, that it doesn't hurt really badly. That's the only way to play this game. All right? Good luck trading today. It is going to be choppy. 100%. You've got to be very alert. Take care, and I'll see you in the morning.